Good morning. Good morning. This is Valerie Leonard. I am the founder of nonprofit Utopia. We're the ideal community for emerging leaders who are looking to start, manage, and scale their nonprofits. I want to apologize. I am having technical difficulties and I'm not able at this point to show my face on screen, but that might not be a that might not be a bad thing. But at any rate, I just wanted to thank you so much for joining us. If you are here, please type your name in the comments. Let us know who you are, where you're from. If you have had any experience helping nonprofits to stay in compliance, if you are working with an organization either as a board member or as an employee, and you might have some issues with compliance, and I'm pretty sure any of us does, because there are just so many issues that come into play here. As you know, it's that time of year. We are coming upon some nonprofits' fiscal year end. As we do this recording, it's June 11th, so I know people are furiously scrambling, trying to get ready for their fiscal year to end, right? And that means putting together your Form 990s, it means doing your audits, and a number of other year-end activities. And then, others of us will be doing the same kind of mad dash in September and October, and then others of us will be doing it in either December or March. So every time we approach a common fiscal year end, I'd like to, just let people know, um, what they should be doing. And in fact, compliance is something that we start from the moment that we start our organizations. We don't really think about it, but when you're doing things like your articles of incorporation, that's the very first step to nonprofit compliance. Any forms that you're filling out with the government, you are dealing with regulatory issues. And our purpose today is to focus on helping you take an inventory of what it is that you need to do. And my focus also is in the state of Illinois. If you're not in the state of Illinois, that doesn't mean that this is not relevant. It just means that as you watch, you should be thinking about how this could apply to you, as well as for, your organization in your state. If you have any questions, you need something that you should figure out, you can email me at ValerieFLeonard at nonprofitutopia.com, and we can think of ways that you can approach it. And you can even go to nonprofitutopia.com and book a session so that we can at least get a sense for, what your issues are. And Taki, oh my goodness, it is great to see you. You and I need to catch up. Thank you so much. Thank you so much for tuning in. I really, I miss you, fella. All right, so I can go on forever and a day talking about this stuff, right? But I want to get started, right? You are here to better understand compliance and what that means. And our theme is just checking, because we're literally going down a checklist, so to speak. And we are sharing with you things that you need. Again, whether you're in the state of Illinois or not, a lot of this will be relevant. And if you're not in the state of Illinois, it doesn't mean that I can't help you. It just means that we need to make sure that the information for your state, you're in compliance with. So we're going to talk about the things you should be in compliance with, not only at the federal level, but at the state level. Again, we're going to be talking about what you need to do right now to make sure that your nonprofit is in compliance. And when we talk about compliance, that sounds like a very scary word. It is a legalistic word, but basically what it means is, are you following the rules? Have you done the things that are required of you by your funders, required of you by your state, local, and federal government? And it is really a pain in the what to have to keep up with all of the paperwork, but it's very, very, very important. And there is a method to the madness as well as a madness to the method. All right. So before we get started with that checklist, I just want to ask you, did you know, right? Did you know that tax exempt organizations are twice as likely as individuals and corporate taxpayers to be late with filing annual returns with the IRS? All right. So this slide here, this will give you some indication of the magnitude of the compliance issue. And this is compliance just as it relates to the Form 990. So for every government regulator that's involved, every process that's involved, every funder that's involved, there could be a whole nother set of compliance issues. Again, compliance is basically following the rules, doing what it is that you said you would do, right? So in the United States, as we speak, there are 2.9 million nonprofits, right? And that includes nonprofits that are in good standing as well as those that are not. So of that 2.9 million nonprofits, 1.06 million, right, lost their tax exempt status just because they didn't file Form 990 for 3 years in a row. So if you don't file Form 990 and in any form, and so that could be anything from your postcard, your 990 EZ, your 990, um, any form of a 990, if you have not filed it for 3 years in a row, the IRS will automatically revoke your nonprofit status. So for the United States, of those 2.9 million, 100, I'm sorry, 1.06 million had their tax exempt status automatically revoked. And this translates into about 36% of all organizations over their lifetime have experienced getting their nonprofit status revoked. Some of them have gone through the process of being reinstated, but still, overall, 36% of nonprofit organizations have lost their tax exempt status just because they didn't file Form 990 in time. There are other reasons that you can lose your tax exempt status. It could be getting involved in partisan political activities. That could be a reason. Another reason you could lose your tax exempt status is because, the IRS has deemed that you're really not fulfilling your charitable purpose. It really looks like you're in business to enrich yourselves and, family and friends. In that case, they will revoke your tax exempt status. So there are a number of reasons, but we're focusing today on things like the 990. So compare people who are running nonprofits or nonprofit organizations having problems with their annual returns. 85% of individuals and corporate taxpayers, they file on time. So it's about 15% who are dealing with some outstanding tax issue where the IRS is coming after them. So compare that to tax tax exempt organizations, and you see there's a big difference. A lot of this comes not because people who are running nonprofits are, inherently corrupt. Most of it comes from what? Lack of knowledge. right? People think, oh, I got this nonprofit organization. I don't have to worry about paying taxes. So it's not even on their radar screen, to even be looking to fill out this paperwork. So if you're in the state of Illinois, and I would imagine the same is true for a number of other states, you would need to file your annual report with the Secretary of State, right? So right now, to the best of my knowledge, I didn't see the downloadable form on the website. They did share these instructions for doing your annual report online. So I have here at the bottom, I've got a link that you can go to this Illinois Secretary of State's office and go to the Department of Business Services, and you can go and follow the prompts and file your annual report. All right. So if you don't file this report on time, and I'm not sure how much time lapses, it's not much, but you can literally, if you don't file this little bitty simple report, and basically they're just looking to for information like, who is your registered agent, who is your board, right? So if you don't file this form, and I'm not quite sure what the time that lapses. It's not much time. You can have your organization dissolved. We're not talking about losing tax exempt status. We're talking about kaput, dissolved. You no longer exist in the eyes of the state of Illinois. And if you don't exist in the eyes of the state of Illinois, you certainly don't exist in the eyes of the IRS. There's some organizations that have been dissolved without knowing it because they didn't realize that they had to file this form. So, be very, very careful. Make sure that you file your annual reports. All right. Not every organization has to do a financial audit. If you look on my website, and when I say my website, I'm talking about nonprofitutopia.com. Go to the blog, and there is an article that has a little bit more information than what I'm sharing with you today. It's very detailed, and I got some information also from the Council of Nonprofits that speaks to who is required to file a financial audit. As a rule of thumb, if your organization has more than $750,000 in expenditures, you should do an audit. However, you may have a funder, be it a government funder, a private funder, they may require an audit for a much lower amount of money. So it's very, very important that you keep up with what your funders require, and typically and I guess it should be obvious, but it's not always obvious. Your financial audit is going to be completed after your first fiscal, well, not your first, after every fiscal year, right? You don't just do one audit and stop. So at the end of your fiscal year, you do your audit. You should also be doing your Form 990s and your annual report, financial report to your state. Alrighty. So the next thing we need to do is make sure that we're in compliance with all of our grantors. So again, if you're getting money from individuals, they may have some requests of you. They may want a status report. They may want to, and that report could be just as informal as a call. Thank you very much. This is what we're doing with our money. But at the minimum, you need to acknowledge that gift in writing so that they can, um, let the federal government know that they have made a contribution to you. They may have other requirements as well. So everybody who gives to you has some requirement, and you need to know what that is. So the federal government is going to have many, many requirements. Individuals, not so much. And the due dates of those reports, those status updates, those are going to vary based on who's giving you the money, how much money they're giving you. All right. So, as I indicated before, you need to file an annual report with the Attorney General's office. And that is true regardless of what state you're living in the United States. You're going to have to file a report with your Attorney General at the state level, and then at the federal level, you're going to have to do an annual report. Um, and and when I say annual report, I'm talking about an information return, which is your 990. So just think about this, like, as we file our taxes, we all have to do federal taxes and we do our state taxes. In the state of Illinois, you're going to do the federal 990, and then you're going to do the 990, I'm sorry, the AG 990 IL. So that is the equivalent of your state return. This is due 5.5 months after the end of your fiscal year. So if your fiscal year ends June 30th, then you'll be doing this, June, July, August, September, October, November. So you have until November 15th if your fiscal year is in June. So regardless of when your fiscal year is, you have 5.5 months to do this. And the reason why they have so long to do it is they also realize that you are probably going to be doing your audits, and that takes time to, get prepared for and to get your management reports and all of that good stuff. All right. So again, as I said before, not only are you filing at the state level, you're filing at the federal level. So these are due at the same time, 5.5 months after your fiscal year end. And there are various formats or forms of Form 990, and you file them based on what your income level is. You can have the postcard, which really doesn't require any documentation whatsoever, or you could do, a 990 EZ, which doesn't require quite as much paperwork as your 990. All right. So if you go on to irs.gov, look under charities, and they have a whole section of the different types of forms that you can fill out, including the various formats for the Form 990 and, all the different triggers. All right, so this is very, very important. People don't really think about it that much, but you got to make sure that the records concerning your registered agent are up to date. It can cause a lot of problems if they're not up to date. So if you're in the state of Illinois, you go to the Secretary of State's office website and you can download Form NFP 105.10/105.20 if you have any changes, right? So your registered agent, that is the person or entity that is responsible for receiving all of your legal notices, all of your notices from the state and federal and local government. I have worked with people who have started organizations, and the person who was the registered agent, for whatever reason, was no longer with the organization. So in some cases, it could be the executive director who left, or it could be, one of the board members who left, but they did not know that they should complete this form. And then even worse, I've worked with people who not only have had a change in registered agent, but they moved a couple times. And for a combination of not realizing that they had to notify the government when they moved, not realizing two, that they had to notify the registered agent, notify the government that the registered agent changed. For 3 years in a row, they did not file Form 990. They didn't think they had to, right? They're like, oh, we're a nonprofit. We don't have to pay taxes. On top of that, they had an attorney. The attorney didn't know anything about taxes and nonprofits. They had an accountant who knew absolutely nothing about nonprofits. And here they were keeping copious records, but they moved around a bit, about 2 or 3 times. They went through 2 or 3 registered agents, and that was a recipe for not getting the proper notices from the government. And before they knew it, 3 years had passed, and they'd gotten a threatening letter from the IRS saying, if you don't pay, if you don't file, you could lose your tax exempt status. And then on top of that, they were going to be assessed penalties and interest, about $10,000, which is significant for a startup organization, right? So be very, very, very mindful. All right. So for those of you who have employees, not only do you have to file for your payroll taxes, you have to pay them as well. And the penalties are extremely, extremely high for this. Again, you should go on to the IRS website, look up Form 941, look at the instructions and all of that good stuff. I have a summary of the forms and a link to the forms on our website, nonprofitutopia.com, in this article. But it's really important that you file Form 941 on a quarterly basis. And then you also do the same thing, at the state level. So you got the federal payroll taxes, and then you've got the state payroll taxes. And then if you live in cities that have payroll taxes at the city level, I'm sure there's some form that they have to fill out as well. But even if you have one employee, I would strongly recommend that you get a payroll service, because this stuff is not brain science. However, you really can get caught up, and organizations and businesses have had to close their doors literally because they got behind on their payroll taxes. And when you don't pay payroll taxes, you get penalized for not filing, you get penalized for not paying, you get interest on top of the interest, and all of that good stuff. And, the debt that you incur actually grows at a much, much faster rate than probably most most stock market investments. So really take those payroll taxes very, very seriously. Talk to an accountant, talk to an attorney to make sure that you're on track. If you're in the state of Illinois, go to the Department of Revenue. They've got all kinds of publications that you can download. But still, even if you read that stuff, if you're not an accountant, I strongly, strongly recommend that you get the professionals to do that. I say that you read it so that you're familiar with what is before you, but leave that to the experts so you can focus on running your business. All right. So some organizations actually own property, right? So in the state of Illinois, in the city of Chicago, in Cook County, the process that you go through is extremely tedious in order to be exempt from paying those property taxes. You have to go through an appeals process, demonstrate how you're using the forms. Again, if you go on to our website, nonprofitutopia.com, I did a blog post that goes very nicely with what we're talking about today. And there's a whole section. There's a link to the forms that you need to fill out at the state level as well as the county level. And there's also a link to a couple pages that you have to go through that gives you a whole list of documents that you need to file. It's extremely, extremely tedious. So I say the first thing you do, hire an attorney. First thing you do after reading what's required, hire an attorney who is versed in real estate in Cook County in the state of Illinois. You also need to file a real estate exemption complaint with the county. And then you have to complete Form P-Tax 300 at the state level. And that's about all I'm comfortable with telling you because I am not a professional in this area. I just know that if you are looking to get exemptions on your property that your nonprofit or church owns, it's a very tedious process. And, that's something you should be aware of. And you need to hire the professionals who can help you navigate. All right. So the next thing you need to be aware of is filing for state sales tax exemptions, right? And this holds true for most organizations, not every nonprofit. If your organization is involved in economic development activity, the chances of your getting exempted from sales tax in the state of Illinois is almost zero, right? But for most everyone else, this is the process that you go through. And I'm not saying that you shouldn't try, but if your mission is about economic development, your chances are very, very slim. All right, so you would fill out this form, and you could fill it out online, and you would go to uh, the Illinois Department of Revenue, right? And I have a link here to this form that you can download, or you can actually complete a form directly into the portal. But at any rate, you need to fill out this form and then provide proof that you are a nonprofit and you're exempt from taxes. So that will be providing things like your mission statement, showing your IRS letter, showing your articles of incorporation, showing your bylaws. And it's a whole list of documents. And I believe you also need to show brochures. So they want evidence that you are tax exempt. And not only are you tax exempt, but you're actually active in the community, living your tax exempt purpose, right? You also need to register with the State Department of Revenue. And this is, again, for the state of Illinois. I would imagine the same is true for any state. Why do you have to do this? The state of Illinois has to keep tabs on who is doing business with them, whether they're for profit or nonprofit. So as you are, I don't know if you paid attention, but nonprofits need to register. They need to register with the Attorney General. They need to register with the Secretary of State. They need to also register with the Department of Revenue. So all of these different entities have varying purposes for registration, but basically you're letting all of these different entity know on their own various forms that you are in existence. You are doing business. Uh, you are operating. You're raising funds. And they need to know whether or not you're tax exempt, because that lets them know whether or not to expect, any revenue from you or whether or not you should be excused. And it also, puts you on their radar so that they can make sure that you're in compliance with all of our other laws. So you're going to have to do Reg 1. And ideally, this Reg 1 form should be completed when you start your organization. So when you start your organization and you are doing your articles of incorporation, once you get it back from the state, then you need to be filling out this Reg 1 form to let them know that, hey, we're in business, we're tax exempt, blah, 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 blah. You also need to register with the Illinois Department of Employment Security. There used to be a hard form UI-1 that you would fill out, and that form is used to determine what your share of payment into the pool for unemployment is. They no longer, from what I could tell, they no longer have that form available. They want you to fill it out online. So instead of having the form, when you go to the link that I have on the website, again, nonprofitutopia.com, go to the article Just Checking, right? And there's a whole list of all these different entities and links to the form. And if not to the form, then a link to these instructions. So here is the link to the instructions. This is what you will see. And then they advise you to fill out the form directly online. Again, the UI-1 is telling you, it's helping the state to determine how much you need to pay into unemployment. If you are a for-profit organization, this form should be done, as soon as you set up. I recommend that nonprofits do it as soon as they set up. Why? Because technically, or not even technically, um, legally, you don't have to do this form until you have 4 employees. But given that you're going to be so engrossed in your work, the last thing you're going to be thinking about is, at what point do I have 4 employees, right? So I recommend strongly that if you have not done this form, that you complete this form. And even if you do a payroll service is going to require that you do this form as well, because this is part of your obligation to the state. So they want to make sure that you're in compliance with everything that the state and the federal government requires as far as unemployment insurance. All right. The next thing you need to be cognizant of is registering with the Attorney General's office. Ideally, and this doesn't always happen. There's so many times that this does not happen. But ideally, when you're starting your nonprofit, when you do your articles of incorporation, right? Once you get those back from the Secretary of State, you want to make sure that not only are you letting the Secretary of State know that you're in business, you want to register with the Attorney General's office so that they know that you're not only in existence, but you intend to raise funds and how you intend to raise funds. So the CO1 form is the form that you use to, register your organization. The CO2 form is the form that you use to speak to, what financial assets that you might have. So things, like income, expenditures, what you have in your bank account and that kind of stuff, that will be required. If you are a church or a religious organization, um, then you need to form to complete CO3, right? And that puts the state on notice that they don't need to bother you every year about filling out these annual reports. Again, the CO3 is just for religious organizations, but they will also, ask you to do your very first form, AG 990 IL, right? Okay, so um, are there any questions? Any comments? All right, it doesn't look like there are any questions or any comments. Just want to let you guys know that we are going to, um, in a couple months, have a course on launching your organization, your nonprofit. So we'll show you how to do it the right way and all of that good stuff. All right. All right. So seeing that there are no questions, again, I just want to say thank you so much for joining me. I'm sorry I wasn't able to come on camera and make eye contact with you and all that good stuff. Hopefully, it'll be better next week. All right. So I shall see you next week. Take care. Bye bye. Hello, this is Valerie Leonard. I am the founder of nonprofit Utopia. As you come to your fiscal year end, I'm sure there's a lot of buzz about Form 990. Some of you who are just starting may even wonder what Form 990 is. For those of you who are just getting your feet wet, so to speak, in the nonprofit space, a Form 990 is a tax, it's not a tax return, it's an information return that nonprofits have to complete. This in lieu of having to do 1040. So, what does that mean in English? That means if you're a nonprofit, you are not going to have to pay taxes, but instead of filing Form 1040, you're going to be doing what they call an information return. So, you're not just giving out information as it relates to your finances, but you're sharing information on a number of things, information that is financial in nature, but you're also going to be talking about some of your practices in terms of the policies and procedures that you might use, how you might go about setting your compensation for your executive director, how you govern the organization, how the organization is managed, what some of your programs and achievements and mission are. So clearly, this is a much more intense process than putting together your Form 1040, and rightfully so, because you don't have to pay taxes, right? So the government is going to take a pound of flesh in terms of the information that they require. All right, so I'm just going to share my screen so you can see what this form looks like. I promise you we won't be going through this entire screen. In fact, we're not going to be doing the entire form. We're just going to be sharing, what this first page looks like just to give you a sense. This is a summary, it's a snapshot of the information that you'll provide, and then the later pages will give you an opportunity to go into more detail. This Form 990 is due 5.5 months after your fiscal year end, and your fiscal year end could be December, it could be December 31st, it could be June 30th, April 30th, whatever you decide. But 5.5 months after that, you have to complete Form 990 for the IRS. And I know in the state of Illinois, you also have to complete the state counterpart, which is a Form AG 990 IL. So just like you have your taxes at the federal level and the state level, you do the Form 990 at the federal and state levels. All right, so I believe that I have answered the question of what exactly a Form 990 is. If you have any questions, feel free to email me at ValerieFLeonard@nonprofitutopia.com, or better yet, just post in the chat. All right, talk to you later. Bye bye. Good morning. Good morning. My name is Valerie Leonard. I am the founder of Nonprofit Utopia. Just want to say thank you so much for joining us this morning. As you are aware, we have finished our fiscal year in a number of our organizations. So if your organization has a fiscal year ending June 30th, I'm sure you are very, very busy trying to make sure that you get your 990s done, get your audited financials, and even if you don't do an audit, I'm pretty sure you're caught up in year end stuff, right? And usually that means getting involved, right, with your Form 990s, right? We have to fill those out every year. And the Form 990, as you are also aware, that's a form that we fill out in lieu of doing a of 1040, right? So it's an information return, and it requires much more disclosure than your Form 1040. In exchange for being tax exempt, you have to really give up all the goods of your information for the most part. And it's interesting, the more you share, the more likely you are to raise more money. So we're going to do, a couple slides that are a review from last week, where we basically walked you through how you read a Form 990 and what the various sections help the reader to understand. Today, we're going to focus on how you can use that document, which is typically used as a financial reporting document or information reporting document, and typically collects dust throughout the year. We're going to show you how you can use that constantly for your own marketing purposes. And for our purpose, we're going to be focusing on how you can use it for fundraising. As you'll find out, different people or different audiences may be looking at the document for different purposes, but we're going to look at it from a funder's perspective and then look at ways that you can, in fact, increase your fundraising as a result. All right, so let's get to it. We are again looking at using IRS Form 990 as a marketing tool. Again, this is an information return, and typically we focus on the financial information, but we're going to show you how you can take advantage of this process to increase your marketing. So we're going to look at how you leverage the relationship between financial disclosure and fundraising. And remember, your Form 990 is a form of disclosure, right? It's not, the same as filing taxes. It's actually worse in many ways than filing tax returns. I'm going to show you how to use this process as an opportunity to increase your fundraising. And then we're going to help you to understand the relationship between Form 990 and your GuideStar profile. And then we're going to show you how to utilize your GuideStar profile to increase transparency in fundraising. All right, we don't have enough time to do a deep dive into the GuideStar profiles. We did about a year or so ago a video on the GuideStar profiles. You can go to our YouTube channel and look at that. I'm hoping that we touch on this at least enough to jar your memory, get you interested in filing your GuideStar profile. All right, so by way of review, we're going to talk about what a Form 990 is. I promise you we won't go into the level of detail that we went into last week. So basically, a Form 990 is an informational return. You do this as a nonprofit in lieu of filing taxes. In exchange for your tax exempt status, you are required to be much more transparent than those of us who are operating private organizations. Not typically, the Form 990 is due 5.5 months after your fiscal year ends. So, depending on when your fiscal year ends, you have 5.5 months to do your audit, do your 990, and turn that into the IRS. At the same time, you have to file an AG 990 IL if you're in the state of Illinois. So you're going to be filing the equivalent at the state level of a Form 990, very summary financial information, but it should be consistent with the Form 990. Every organization has to file Form 990. All right, so who reads Form 990 and why? Who else other than Valerie Leonard reads Form 990 and why do they do it? So there are a number of audiences for Form 990s. First and foremost, we think about the IRS, right? They're not on this list, but that's a given, right? The IRS is really your friend. Believe it or not, the IRS is not asking you to do these information returns just for enforcement purposes. It's not just for enforcement, is not just because they're trying to regulate you, even though those are two major reasons, but they're also using Form 990 as an opportunity to learn more about the nonprofit sector, to even strengthen the nonprofit sector. They take this information and actually refine their policies and provide even more technical assistance beyond filling out the form, helping you to actually strengthen your organization. Donors and grantors, they're interested in the information. Obviously, they want to make sure that you're fulfilling your mission and that your programs are in alignment with your mission. They also are very, very interested in governance and stewardship. And the information on that return helps them get a sense beyond the conversations with you how your organization is actually being governed, not necessarily managed, but how is it being governed? And at the same time, it does give you insights into how it's being managed, how well you are in compliance, because they're not going to be giving you any funding if you're not in compliance. Why? Because your compliance impacts their compliance. And then, two, your compliance also gives them an indication of how well you steward your gifts and how well you manage the assets that you have. Um, Donors and grantors also want to be able to understand your accomplishments. So, the way the 990 is written, there's plenty of opportunity, even though it's not explicit, but there is plenty of opportunity to talk about your your accomplishments and how they align with your mission. And I'm going to show you how to do that. Most people are just focused on, the financial part. And even when they have these opportunities to talk about accomplishments, many people don't take the opportunity to go into the level of detail that they can. Potential board members, they're interested in Form 990s because remember, as people who are governing the organization, they have a fiduciary responsibility to make sure that you are wise stewards and that you're in compliance with the federal and state and local governments. So they want to make sure, one, that your your mission and your programs are in alignment, because after all, the buck is going to stop with them. They also want to make sure that the governance is tight because remember, the buck stops with them. Anybody, the staff can be wrong as all get out, but at the end of the day, it's going to be the board members who are held accountable. Your creditors and banks, they're obviously going to be interested in this because they want to understand, your financial background, as well as governance and policies and how compliant you are. Compliance is really important, as you'll see down the road, because everybody has a stake in how well you comply, because the extent to which you comply with federal rules and regulations will give them a sense for how well you're going to comply with their own rules. Your vendors and service providers, they're going to be using your Form 990 to glean information, one, to know, whether or not you're quote unquote worthy of taking a chance on, that they want to get a sense for whether or not you'll be in a position to pay them for the goods and services. And also for marketing purposes, they want to understand who you're doing business with. And then external evaluators, they'll take into account your governance structures, policies, and compliance to, again, to be able to write a strong report for you and make some recommendations as to how you might improve. And then they also want to assess program accomplishments and the alignment with mission. And they'll have other tools that they can use to do that, but they want to make sure that every step in the process, you know, that you do as organizations, or every process, is in sync, right? So those are the different audiences. We're going to be focusing today on donors and grantors and how you can make yourself more attractive to donors and grantors. All right, so how exactly can you use Form 990 for marketing purposes? One, you want to use your responses as opportunities to portray your organization in the best light. There are pages and pages of information asking you tons of questions on your business practices, your business relationships. They want to get a sense for how well the organization is managed, want to get a sense for what policies you have in place to manage conflict as well as to manage the organization, conflicts of interest, whistleblowers and document retention, et cetera, et cetera. You can also, in addition to responding to the questions, that they have in the main body, you can use Schedule O to actually go into more detail. And we're going to show you some examples of how you can leverage Schedule O to provide more information than you normally would. And this will really help you stand out with with potential funders, and also help you stand out against the other 2 million organizations that we have in the United States alone, right? Another way you can use Form 990 for marketing purposes is to actually post it on your website, and we'll show you some examples of how that is done or can be done. It doesn't have to be limited to the example that we're going to show, but we'll just share that. You can also claim your GuideStar profile. And just a word about GuideStar. GuideStar serves basically as a clearinghouse for information on over 2 million organizations in the United States, right? So people tend to go to GuideStar to, look at Form 990s, right? So whether or not you actually submit your Form 990 to GuideStar, they have access to it. They have an agreement with the IRS, so they are collecting information on you, and they will write your bare bones profile. It's in your best interest, though, to claim the GuideStar profile and provide information so that you can control your own narrative and provide even more information and answer any questions people might have and be, more proactive. And then you can use it for marketing purposes, apply for your GuideStar seal of transparency, right? And remember, the basis for these GuideStar profiles is the Form 990, and then they build on the basic information that they glean from the Form 990 to give you an opportunity to give even more information. And they've actually found that people who give more information tend to get more money, right? They build up that know, like, and trust factor much quicker. And also the fact that the information is out there and it's available for anybody to look at it. They don't have to necessarily come to you. They can take brief notes and then, talk to you if they are interested. So enough of that. So, one of the best sections, I think, for marketing purposes is part three, Statement of Programs and Services. Here you have an opportunity to share your mission. And some organizations, rather than talk about their mission, because their mission may be very, very short, very, very broad, and might not give a good sense for the work they do. Some organizations take this as an opportunity to make a statement where they can expound on the work that they do, the why they do, and a little bit about the impact. And they might even carry it on to another section to, give you even more detail. This section also, lets people know whether or not you have any major changes. If you have undergone a strategic change, this might give some information here. And then the part that's most telling here is 4A, where you talk about the expenses for various programs, usually your top three programs. And if you need to provide, more information, you could do that either in Schedule O or an additional piece of paper. But here you get to talk about the program, talk about the expenses, and talk about the revenue that you get, and then the grants that you get. Remember, revenues are the income that you generate from some product or service of the program. A grant is the money that you get as a result of, writing a proposal. You don't have to pay it back. These blank lines here are your opportunity. Most people typically are very, very brief here. They just kind of give very high level details, not even much detail, but high level information about the program, right? One or two sentences. I've seen, some of your organizations that are most effective. I have seen them not only use all of these lines, but go into more detail so people can really, really get behind the numbers that they might see in this document and really, really understand the organization, how it functions, and their accomplishments. So don't be ashamed to brag here. And remember, in your absence, the one of the only things that people who are thinking about giving to you would have is this Form 990. So this section gives you a sense for the types of programs, your accomplishments, have you really made a difference? How much money was spent? Where are you allocating the most of your resources? And then for those of us who are looking critically, we can get a sense for whether or not your activities, your programs are in alignment with your reason that you say that you started the organization. So some of the strategies that I would suggest that you use to optimize the opportunities presented in this section would be: one, include a mission statement or a compelling statement that describes what the organization does and its impact. And you want to make sure that the program descriptions are in line with the mission. And in those instances where you're engaged in activities or programming that doesn't seem, to readily suggest that it's in alignment with your mission, this is an opportunity for you to kind of link, link it together, show how things that don't seem like they go together actually do go together. And again, you can tell a story that conveys the value that you're conveying onto the people that you're serving. How is it that, your services are valuable? And when we talk about value, we're not necessarily talking about the exchange of money. In many cases, you are giving away your time. But if people don't value your service, right, they're not even going to take the time to let you give it to them, right? So value can be expressed in terms of the number of people who are willing to consume your services, right? Another way you can convey value is look at the impact. What has actually changed for the people that you're serving or the community that you're serving as a direct as a direct impact or as a direct cause of being, engaged in your program. And that will help funders understand too whether or not they're getting a good bang for their buck. Remember, funders are, they're buying impact, right? Units of impact. They're also buying um, reach. How many people can you reach? How many people can you change? And what cost per person, right? And you can convey that in those sections. All right, so I want to give you an example from the North Lawndale Employment Network. The North Lawndale Employment Network, for those of you who may not know, they are one of the premier organizations on Chicago's West Side, I would say in the city, and I would even say nationally now, where they work to transform the lives of people who are formerly incarcerated and other people who are difficult to place. So there are a number of placement programs and supportive service programs that they provide, right? And I think they have done an awesome job of using their Form 990 and related processes to convey value, right? So here, when they fill out uh, part three, I think they're very, very succinct. They have their mission statement, which is to improve the earnings potential of North Lawndale residents through innovative employment initiatives that lead to economic advancement and an improved quality of life, right? So I think that's a very powerful statement. And then they speak to their top programs, right? They have 4 programs. They indicate how much money they're spending, right, on each program. So you get a sense for, where their priorities are in terms of allocating resources. So they have allocated the most resources to the U-Turn Permitted program. This is one of their first programs. This is their flagship program. Of the $4.9 million they're spending in programs, about 3.2 million goes for the U-Turn Permitted program. All right, and as you can see, the U-Turn Permitted, our flagship job readiness training program, is for men and women who have barriers to employment. During the 4 weeks, participants cover topics such as resume building, mock interviews, proper attire, and more. So when you read that, you get a really good sense for what that program is about. And they do that for each one of their programs. I promise you, I'm not going to read all of this. If you're interested in reading this for yourself, you can go to GuideStar, do a search for North Lawndale Employment Network, and you can look at their profile, and they will have their Form 990s linked there, and you can download them for yourself. I wanted to look at Candid. Why? Candid is the parent company for GuideStar. I wanted to see how the people who are actually um, asking people to give their Form 990s, taking the information and gleaning it and selling the information, quite frankly. I want to see how they would respond since they're encouraging us to actually give them information. I want to see how they use their Form 990s. So under the section, under line 1, briefly describe the mission. They don't write anything about their mission at all. They say see Schedule O. So Schedule O is a schedule where you can go into more detail. You can answer some questions that you might not necessarily have room for. If you see that there's some answer that as it stands alone might cause some concern, you might use Schedule O to be proactive and describe what's going on, right? So they said see Schedule O. And when it comes to describing their programs, they say see Schedule O. So they can go into much more detail. but they do give you a sense for how much money they spent for each program, how much revenue they generated, and how much grant money is coming in. I think what's very, very interesting is the folks at Candid, at least for the GuideStar program, they're not depending on grants to be sustainable. They've got a business model. They're generating revenue. So you can see that uh, they do share expenses. They don't have any grants, but they're generating revenue from their products and services. So on line 4A, it says see Schedule O for a narrative on the products that we have to offer. On 4B, it says see Schedule O for narrative on the public interest in other programs. They're generating 31 points, what, almost 31.3 million just for their products and services. So I think that's a lesson for other nonprofits. Think of ways that you cannot depend so heavily on grants, and even if you can get to a point where you don't depend on grants at all, that would be wonderful. Run your organization like the wonderful businesses that they can be. All right, so they've got a total amount $26 million and some change on the expenses for their programs, right? And then they go in Schedule O to explain, I would say ad nauseum. I think I met my match. Anybody who knows me knows I never met a word I didn't like, and I tend to go into a lot of detail. This is only a section of their response on Schedule O, which is really supporting the answers that they provided in Part 3. All right, so on line 1, rather than just speak to a mission, they actually provided a mini problem statement. They give you their why, and I think this is really interesting. It says every year, millions of nonprofits spend trillions of dollars around the world. Candid finds out where that money comes from, where it goes, and why it matters. This gives us a unique platform where we can surface data and insights to inform decision making, streamline the grant making process, and ensure more equitable access to funding. Candid gets you the information you need to do good. So you find value in that. You understand their why. You understand, how they're actually using the money that they have. They don't at this point get into the nitty gritty, but you really do understand the impact that they could be making. Now, this space in yellow, that's something that I highlighted myself because I thought it was really, really interesting. And I promise I'm not going to read all of this, but I'll just kind of summarize what they're talking about. Um, the first part of the paragraph, they speak to how their programs align with their vision. Remember, when funders are looking to determine whether or not they want to give you money, they really, your more sophisticated ones are going to look at how your programs align with your mission. So they're telling you, what the alignment is. They're telling you what their programs are and what their services are. And they're also indicating too, the social sector is fragmented, and that leaves individual organizations culturally and operationally isolated. Through a common profile, we can increase the throughput of basic organizational information. We can reduce waste, reveal diversity, and build shared identity. A key step towards establishing a common organizational profile requires us to increase and improve the data in Candid profiles on GuideStar. So for those of you who are not familiar, GuideStar, they take your Form 990, right? They create a profile based on the information that you submit in that Form 990, whether you ask them to or not. It's just a standard procedure. They've got a relationship with the IRS. So they realized too that that information could be very valuable. So they figured out a way to kind of rearrange it and add value, but they also have figured out other questions that they can ask and have you to add more value to your own profile, right? And we'll talk about that later in the presentation. But what I thought was interesting here is they really talk about the impact. They say, look in the yellow area, it says GuideStar currently includes data on 1.8 million registered nonprofits, making it easier to understand who they are and what they do. Nonprofits, I'm losing my place. Nonprofits are encouraged to update their profiles at no cost to them. And as of December 2023, 96,325 organizations had earned a candid seal of transparency. By doing so, they increased their visibility on Candid's platforms that are accessed by 12 plus million people each year. This information is also made available through donor platforms that use our tools, including technology companies, donor advised funds, and giving platforms which use our information to increase access to trusted data. All right, blah, blah, blah. So you see, they really, really took advantage of this opportunity to tell us probably more than we care to know, but you have to admit it gives good information to help us to really understand what their impact is and how many people they touch. All right, another major part that funders are looking at are is part 9. That's your statement of functional expenses, and what your functional expenses are. They're expenses that are grouped into basically 3 major categories. One would be your program and service expenses. Two would be your management and general admin expenses. And then 3 would be your fundraising expenses. So the form has line items, going down the line, but these line items are broken out into various columns. So that the reader, and in this case, we're focused on the funder gets to understand, okay, so for every dollar, how much is going into program? Is it 60 cents? Is it 70 cents? Is it 80 cents? Is it 90 cents? How much is going into administration? Is it 10 cents, 20 cents, 30 cents? How much is going into fundraising? All right. So that gives them a really clear indication of how much money is actually going to fulfill your nonprofit mission. As a rule of thumb, I know when I was coming up, a rule of thumb was to use 10% for admin, about what, 10, maybe 15% for fundraising, right? And then what's left, about 75%, 75 to 80% for programs and services. And usually, folks are like, oh, it's a red flag if you find that you're spending, you know, less than 70% on programs and services. Often, if you see more than 70%, it might have something to do with the way you're actually allocating the expenses, across these line items. And then sometimes people really are somewhat wasteful. But at any rate, that's going to vary. Even the IRS, even though they have benchmarks, they realize that no two organizations are the same, and no two industries within the nonprofit sector or subsectors are the same. So depending on what you do and what your funding source is, you're going to have varying cost structures, right? And in the event that something might look out of whack, you might use your Schedule O to explain things that might look a little odd to people. But bottom line, when we look at part nine, what can we find out? We can find out how healthy the organization is financially, whether or not you're spending what would be considered too much on general administrative costs and fundraising costs, and how much money is actually going to fund your nonprofit purpose. So some of the strategies, I would recommend for completing this section, make sure that you have a proper allocation, of your expenses, and sometimes, we could be doing quote unquote the right thing the wrong way. For example, if we look at our salary costs, one mistake that I've made and I've seen on the Form 990 is people taking salary costs and automatically putting that in your administrative column. The truth of the matter is, it takes people, right, in order to administer these programs. They're going to be spending X percent of their time actually doing the program, Y percent of their time fundraising, and Z percent of their time doing administration. So you need to make sure that that allocation, you know, adequately represent what's going on. If you're not careful, it if you lump all of your salaries in admin, it could it could look like you're spending 80% of your resources on admin, and that's not a good look, right? If there are any line items, again, that look questionable, then you might want to put a footnote. And when I say footnote, you might want to explain in Schedule O anything, like I said, be proactive. Anything that looks a little different than it normally does, anything that might look a little different from similar organizations, you might want to use Schedule O to explain. All right. Make sure that once you do your Form 990, you post on your website. I know the tendency is for people to try to keep as many secrets as they can about their nonprofit organizations. The truth of the matter is, by law, you as a nonprofit are required to present your Form 90s publicly. In fact, on Form 990, you have to describe how you're going to make the Form 990 public. And if you don't comply, and when I say comply, if somebody asks you for it and you don't provide it, they can file a complaint with the IRS, and you really don't want to get in trouble with the IRS. And given that this is public information anyway, it's in your best interest to provide it publicly. And in fact, if you put it on your website, as the IRS recommends, if you put it on your website, you can just refer people to your website rather than, arranging meetings to have them come and inspect the documents on premises, blah, 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 blah. So, what might that look like? You don't necessarily have to follow this format, but I think this is a really good way to do it. Charity Water, they are an international organization that focuses on making sure that developing countries have good, clean water. And what they have done, they have gone over and beyond the call of duty in terms of disclosure. At a very bare minimum for disclosure, you need to do the Form 990. That's going to be posted on the IRS website. It's going to be posted on the GuideStar website and now other websites. You may as well do it yourself, right? What I like about what they've done, they have provided information again, over and beyond the Form 990, to a point where they've got the highest level of disclosure guaranteed or granted by candidates. So they have reached the platinum level of transparency, and I'll share what that means. But they also, in addition to putting that badge on their website, that's like a good, clean bill of health, right? It's like, oh, we know they can be trusted if they've gone through all of that, sharing all of that information. And on top of that, they have a link to their annual report. They have a link to their audit report. They have a link to their audit for their model. So not only are they sharing, the audit report, but they're also going that extra mile to show that their financial models that they're using to actually generate the financials are intact, following uh, GAAP. And then they share the Form 990, and they do that, for many years, several years going back. So I think this would be a great model to share, and you might want to put your own twist on it. And that's a good way, I think, of raising money in your sleep. People from the public, potential funders, they can look at that information and you know get a lot of their questions answered before they even approach you. All right, so you can leverage your Form 990 by claiming your GuideStar profile. So if you have not completed a GuideStar profile, you can go on to GuideStar. You can type in your organization's name or EIN. They will have a GuideStar profile for you if you have completed, the long form. And then if you haven't claimed it, you go through the process of claiming it, and then you can update it yourself. For every level of transparency, they provide a badge. So at the very basic level, you've got the Form 990. You get no points for that. At the bronze level, there's a certain amount of disclosure for those who want to give more information. There's silver, there's gold for those who give more, and then platinum for those who give even more. And it really, really does work to your advantage, I believe, to give more information. All right. So, some of the advantages for completing your GuideStar profile: one, you get to write your own narrative. GuideStar, they're going to glean information that you put on your 990, and they're going to put it onto your profile. But the profile itself gives you more opportunity to go into more detail about some of those questions, right? And then there's some questions that they have on there that are not on the Form 990, and you can really get a better sense for who you are as an organization. Another advantage is you get to download a dashboard report that can be shared with your board and other stakeholders. And it will behoove you really to, not only do the profile and claim it, but to get that bronze level or any other level beyond that so that you can share a richer report. Another advantage is the fact that your information is automatically shared with 200 or more charitable sites, and that includes Salesforce, Facebook, donor advised funds, and Network for Good. And again, there's 200 sites that your information would be on, so again, you're marketing in your sleep. So it's really important that you present yourself in the best light. And organizations that complete GuideStar profiles, again, they've increased their fundraising as high as 53%. Now, caution you, just because some organizations get a 53% increase just as a result of, using the disclosure, doesn't necessarily mean that you're going to have the same result. But I will say that over time, the more information you give, and the fact that you're being positioned with other organizations that are doing the same types
of disclosure, that increases your know, like, and trust factor, and that automatically releases more funds. All right. So, in order to get a bronze seal, you need to provide, certain information, stuff like your contact information, your donation information, your mission statement, and leadership information. And the purpose for this particular level is to provide basic information and to ensure that you can be found by funders. So there are a few questions that you're going to ask that will help enter your organization in a searchable database where people can find you under different categories. All right. So to get the silver seal, you're going to have to provide everything that you provided under the bronze. And the purpose there is to share your programs, build your brand, and display your nonprofit's latest activities with donors. So, in addition to everything you share with bronze, you're going to be sharing program details such as your name, brief description, and geographic area served. And this is really going to be an even better narrative than you can provide on Form 990, even if you are going into a lot of detail on Form 990. You can be more creative and artistic in your presentation here. You also can let people know whether or not you're a grant maker. Some organizations, in addition to, our traditional foundations, some organizations actually take money from foundations and they re-grant it. So if you re-grant funds, you can share that information. You can also, again, be concerned about your branding, things like your logo, your tagline, your website and social media account. All of that stuff you can add. And then for a gold seal, you you can add additional information, and this is information that will speak to your capacity and capabilities. So that would be things like your most recent 2 years of financials. If you have audited statements, that would be great to add. If you don't have financial statements, make sure you get statements up there that are recent, that are conforming to generally accepted accounting principles. And then you can also include things like your board chair's name and then your leader's demographics. So you can actually speak to your board makeup in terms of race and gender and sexual preference and all of that stuff. So people really get a sense for who you are as an organization. And then if you want to go to the highest level, you have to provide all of that information. But in addition to that, you want to provide information that demonstrates impact and strategy. All right. So you're going to look at strategy and goals. You can upload your strategic plan. You can answer a couple questions that they have that speak to strategy. And then you can also share metrics and let people know, how many people you're serving and other ways that you can judge your progress. And you want to share at least one impact based metric. All right. So this metric from 2022, that could be a metric from, your most recent year. Um, the 22, I got that from the GuideStar website, and they probably should update it. All right, so at this point, I'm going to take questions. And again, if you want to see how GuideStar profiles can work, we did in fact do a video on GuideStar profiles, and you can check those out. All right, if you have any questions, please feel free to post. It doesn't look like there are any questions. All right, there being no other questions, I will let you go. Make sure that you tune in next week. We're going to be talking about how you can use the Form 990 to better understand the ethics of an organization. All right? Take care. Bye bye. Good morning. My name is Valerie Leonard. I am the founder of nonprofit Utopia. We are the ideal community for organizations who want to grow themselves and build capacity and all of that good stuff. All right. We have been focusing on Form 990 for the past month. Today is the last of our series. And if you want to go and look at the other videos, you can go to our YouTube channel where you can learn all things Form 990. Today, we are going to focus not on ethical issues, but we're actually going to focus on using Form 990 for performance management. All too often when we speak of Form 990 or think of Form 990, we are thinking about, oh, we need to get this thing out of our hair. It's our year end duty. We're not filing taxes, but we got to file this form, which can be even more tedious than filing taxes, right? So we're going to talk today about how you can use Form 990 for things other than reporting. We're going to help you to manage your organization a little bit better using Form 990. We're going to also show you how to be more strategic and more competitive as you use your Form 990. All right, so without further ado, I'm going to share my screen and we will get right to it. Just one moment. All right, I said that we're going to be using Form 990 for performance management. And this really shouldn't take that long, but we're going to give you an overview of what we'll cover and then also give you an overview of, shall I say, a review of things that we've covered already. We'll talk about Form 990, what it is. We'll talk about performance management, benchmarking, KPIs and dashboards, just to give you some background information. And then after that, we will show you some real examples of how you can use Form 990 for performance management. So as we indicated before, instead of paying taxes, nonprofits actually have to go through an annual process where they're disclosing financial information, how they manage their organizations, how they govern their organizations, and what policies and procedures they have in place. So it's an information return as opposed to a tax return. And in exchange for being tax exempt, you have to basically share almost all of your information publicly. So, for our purposes today, when we speak of performance management, we're looking at operations as opposed to programs. Very commonly, when we talk about performance management, we think about outcomes and indicators of outcomes for our programs. We don't necessarily think about performance management in terms of the whole organization, right? So looking at operations, and that's everything that undergirds or supports our programs, right? So if we do this right, we will be able to run our organizations more effectively. We'll be able to improve quality of services, the time in which it takes to get our services to market. We'll be able to be more responsive to changes in the market and be more strategic. We'll be able to deliver higher quality, maintain cost, and productivity as well as efficiency. I promise you, we won't be going through all of the nitty gritty details because, as you can see, there are many, many, many reasons why you would deal with operations management, right? But we really don't have time to go as deeply as I would like. If you have any questions, you can always email me at ValerieFLeonard at nonprofitutopia.com. And in fact, I'll be teaching a course in operations management with UIC in October. So if you have any questions about that course, feel free to email me about that course. So, one of the first things we want to talk about is benchmarking. So, when we speak about benchmarking, we're basically looking to compare our own organizations with organizations that are similar to us. Similarly situated organizations, so that could be organizations that are in the same community, organizations that do the same things that we do, organizations that have similar revenue annually, organizations again that are very similar to ours in terms of age as well. And that also helps us to have a better discussion with our funders, better discussion with people in the community, because all too often when we start our organizations, we have a tendency to be discouraged if we look around and see other organizations doing so much better in terms of revenue. And sometimes we're compared, the smaller startups are compared to the larger organizations, which is not fair. And you, as a young organization, as a relatively new startup, you can frame the discussion such that you're comparing your performance to organizations that are like yours in the community. And Form 990 can help you do that. All right. And you can also not only benchmark against the community and other organizations that are similar to yours, you can also use Form 990 to create benchmarks for your own organization, internally, where you're competing with yourself, so to speak, year to year. Alrighty, the next definition we want to go over is key performance indicators or KPIs. Those are metrics that help us understand organizational health. So looking at indicators over time will help us to understand how healthy our organization is. Just think about you're measuring your blood pressure over time, your blood sugar over time. Those are key performance indicators as to how well you are, right? So, likewise, we do key performance indicators for our organizations to help us understand how healthy our organizations are. We can also use these metrics to help us develop goals and objectives and also determine how quickly or yeah, how quickly we're advancing toward those goals or even going in the opposite direction. And we could self correct, if we're proactive, we can self correct before the problems get out of hand. A dashboard is taking those data that we get from our Form 990 or any other source, but a dashboard, since we're talking about 990s, I have to throw that in, but really a dashboard is a visual representation of several KPIs or key performance indicators or measurements or metrics over time. So you're looking at various results at the same time so you can really get a snapshot of what the organization is on different levels. And where do we find the data to create the dashboards? Form 990, since we're talking about Form 990s, that's a great place to start. It doesn't have to be the only place because, quite frankly, each organization is different and there may be certain data that you want to track that's not found on your Form 990. But because the Form 990 is so comprehensive, chances are the data that really, really matters in terms of helping you understand how healthy your organization is can be found on Form 990. All right. In those instances where you're looking at things Like fundraising, fundraising metrics, you may have to go a little bit deeper than the information that you have on Form 990. In those cases, you will use the data that you have, stored in your online fundraising platforms, or you can also share those data or some of those data and metrics with GuideStar as you develop your profile, and then also, apply to get the various badges. And the more information you disclose about yourself, the easier it is for people to understand who you are, what you do, how your performance is, etc., etc. All right, so enough of the definitions. I just want to give you a refresher on the parts of the Form 990 where you would find the information that you want to track for performance purposes. And it's always a good practice too to share your Form 990 with your employees, so that they understand the health of the organization and that they can also use the Form 990 as a management tool. All too often, we fill out the Form 990 and it just sits there until the next year, right, when you have to do it all over again. But it's really, really very rich in information. As you can see, this is a summary. It gives you a snapshot of how your organization is doing. It speaks to the mission, and it also speaks, very much, in very high level terms, what your activities are, what your revenues and expenses are. And you see, for every blank you have, that's a piece of data that you can track, right? The part eight, your statement of revenue, this is more detailed information financially. Again, for every blank you have, there is, there's data to be collected, right? So you can track your income and expenses, but you can also break it down, how much of that money is coming from grants, how much is coming from program service revenue. That is, for example, if you charge fees to participate in your program, so you can track that separately. Any other revenue that you get, like investment income, any other miscellaneous revenue. Again, for every box you have, that's an opportunity to collect data. If you look at your Form 990s over time, then you can begin to develop a trend analysis. All right. The statement of functional expenses. This is looking at your expenses, breaking them out into administrative costs versus program costs and fundraising. And these are opportunities to really help you understand how effective the organization is, not only in managing money, but how effective the organization is in terms of making sure that as many dollars as possible go to your mission, which is measured by, your program expenses. All right. And then part 10 is your balance sheet. And your balance sheets are basically a snapshot of how the organization is doing in terms of the assets you have, which are things that could be converted to cash, right? And the most liquid is the cash, right? But there are other assets that are valuable that you might have. And then there are liabilities, and then there are net assets. Again, for every blank you have here, that's an opportunity to track one piece of data over time. So what this chart does here, this is analysis of community improvement organizations in Chicago 60624 community. Chicago 60624 community is really 60624 zip code. And that includes communities such as North Lawndale, Humboldt Park, East and West Garfield. So it's a West Side community. And these are organizations that describe themselves as community improvement organizations. So these are ranked in terms of total revenue from low to high. So organization one has $11,750 in revenue versus organization seven, which is the highest for this grouping, this segment, right, within 60624. And they have about $1.9 million. So when we look at the segment, on average, they're getting about $772,000 and some change. So if you are a community improvement organization, this is some really good information to understand how you stack up against other organizations that do community improvement. This will also show you well, what's going on with the zip code, right? So there's seven organizations that identify as community improvement, and these are organizations that actually reported revenue. But there are seven that reported revenue, but the zip code average, which consists of close to 500, not quite 500 organizations, when we look at their average total revenue is about 5.2 million on average. So it wouldn't be fair, if you're a community improvement organization, to look at, what's going on with the whole zip code and compare your performance there. It might be a little discouraging, right? So that's why you want to benchmark yourself against organizations that are similar to yours, right? But it's still useful to understand, okay, so how much money does the average organization in our community make? And community in this case is defined as zip code 60624. And as you can see, we can use these data for benchmarks for total assets, cash and cash equivalents, net assets, total revenue, and total expenses. And you can use these data, to say, this is kind of where I am. I fit in, I'm closer to say organization four. You might want to use the information you see on line four, organization four, to begin to set some goals and objectives. If you're a little bit more developed than that, then you probably want to look at organizations five, six, and seven and compare yourself to those, use those numbers to develop internal goals. So your goals could be that benchmark, right? And then you try to outperform whatever those benchmarks are. All right, and here is an example of an organization that's in 60624. It is not a community improvement organization, but it is one of your more stable organizations. I thought it would be good to share this information as an example. This is a workforce development organization, and this first box, I'm sorry, I went in the wrong direction. This first box, the organization revenue over time. So between 2019 and 2023, right, we can see the trends in revenue, and then so that's in blue. And then we can also see the trends in the change from year to year. So in 2019, as they went from 29 to 2020, as many organizations did, they saw a steep drop in revenue, right? But over time, they've been able to recover. And also the changes that you see, as demonstrated by the red line, the changes are evening out. It's not so volatile. It's beginning to be a little bit flatter, right? And then when we look over time, the cash on hand, this is very telling because we know that cash is the lifeblood of an organization. It is very possible to be revenue rich, right? Have your revenues increasing, but the cash on hand decreasing, which can be a cause for concern if you don't have a line of credit. I believe this organization does have a line of credit, but if you're an organization that doesn't have a line of credit and you find yourself revenue rich but very little money on hand, this chart can help you to make some decisions. Decisions as to what do I draw down on a line of credit? If so, how much? How long can I survive if I don't get another dime coming in the door? If I can't survive more than uh, the cash on hand, what decisions do I need to make? Do I lay people off? Do I do more fundraising, et cetera, et cetera? This information can also be used, to help you with your strategic planning because it will help you get a, really good understanding as to, whether or not some of the strategies that you're using currently are actually working for you in terms of your cash flow, or you can also augment, in addition to focusing on programs, you can augment those programmatic strategies and include cash management strategies. So not only are your programs getting healthier, not only are you making a stronger impact, but if you get a hold of that cash situation, you can make even stronger impact. All right. So this third chart, the expenses over time, as you can see, the expenses, they're somewhat, they fluctuate somewhat, but they are, over time, the last 3 years, they've grown, um, I guess, steadily. But if you look at the red line, right, the red line is showing you that the percentage change of those expenses is decreasing, which means that the organization is coming to a point where they're stabilizing the negative impacts of COVID, right? Which is a good thing. Now, this last box is looking at accounts receivable in blue versus I'm I'm sorry, accounts receivable in purple versus the cash on hand in blue. So they've got cash on hand, which seems to be steady, but is significantly lower than the receivables. And the receivables, the gap between what is owed to the organization versus what they have is probably concerning, but it looks to me too that as of 2023, they are making some movement toward closing the gap between what they have on hand and what they expect. So, again, these charts, these dashboards help you see at a glance, what's happening with the organization. And it also helps you to make some decisions as to what you need to do in order to, uh, make sure that the organization is viable. So for our purposes, we just use Form 990 to look at the financial information. You can also use Form 90 to pull data in terms of human resources, the number of employees over time. You can look at things like number of board members over time. You can look at employee salaries over time, your executive director compensation over time. So, whatever your priorities are as an organization, I guarantee you the Form 990 is going to have a significant amount of those data that you can look at. All right. So you can also augment your Form 990s with GuideStar. GuideStar has a Form 990 for every organization that files them. They keep a record. You can go and claim you can go ahead and claim your GuideStar profile, and at a base level is going to have your Form 990, but you can augment it by sharing more and more information. And the more information you share, the more likely you to get a badge. They give badges in terms of bronze, silver, gold, and platinum. The more you give, the higher up that chain you go. You're also able to share information that you might not find on your Form 990 unless you really are skillful at using Schedule O, but even that can be very, very tedious. This information here is taken from GuideStar, and this is self reported by an organization who is at the highest level in terms of disclosure. So they have shared metrics, like the number of job skills, trainings, and courses they conducted over time. They went all the way from 2014 to 2022. Number of financial literacy courses conducted, number of those who successfully gained employment. So this is really, really helpful as well. All right, so I am going to stop there. If you have any questions, any comments, feel free to leave them in the chat and I will get back to you. It doesn't look like we have any questions or comments. So until next week, you take care. Bye bye. Good morning. My name is Valerie Leonard. I am the founder of nonprofit Utopia. We are the ideal community for emerging leaders who want to start, manage, and grow their nonprofits. We have been focusing for the past few weeks on Form 990. For those of you who don't know what Form 990 is, it is an informational return that nonprofits use to file. So instead of filing taxes every year, they're filing information returns. Okay, so what happens here, instead of filing taxes, just filing the financial information, you're also disclosing how the organization is managed. So there are a number of questions that give the IRS a sense for how well your organization is being managed. But as we have learned over the past few weeks, want to use the Form 990 for management purposes. It helps you to make sound decisions, but other stakeholders, and we'll get into that, will also be interested in understanding your Form 990. So when we talk about ethics, we're basically talking about, an organization's sense for what's right, what's wrong, and their core values, right? And your Form 990 is not going to be used necessarily to uncover things like fraud, but it will really give you a really good sense as to where an organization's heart is, so to speak, and what their values are. They can state what their values are, but then when you look at the evidence presented in the 990, that can give you another look, right? And whether you are starting an organization, this is something you need to understand. Whether you run an organization, is still something you need to be aware of, because when you prepare your Form 990s, you want to be in a position where you present your organization in the best light, and that whoever is reading, and for whatever purpose they're reading, they will walk away with a full understanding of how the organization is operated, and hopefully you will have communicated that in a very positive way. All right, so you might be someone who is looking for a job, right? And you want to make sure that your organization, the organization you're thinking about joining, is on the up and up. Not only are they financially sound, but you want to get a sense for their ethical perspectives because fit is a thing, right? And the same for people who want to join boards, et cetera, et cetera. So we have designed this live stream to help what sections you need to look for or look through in order to better understand how the organization governs itself. And that will give you some insights as to what their ethics could be, how well they steward gifts. You will also learn how to identify red flags, how to take corrective actions, because sometimes the information on the Form 990, it may not be inaccurate, but it still may be presented in a way that might raise questions. And in the event that that does raise questions, we'll share with you how you can either take corrective action if you're doing something that you shouldn't be doing, or if it's just a matter of your having to answer questions, with more detail so people understand that you are an ethical organization. And we will also help you to use this disclosure process. And remember, this is disclosure and not necessarily to pay taxes, but it will give you an opportunity to uncover ethical issues, not only for your organization, but for other organizations. Again, different people have different reasons for looking at Form 990. And just to let you know, the information from this presentation comes from Telling the Nonprofit Story Through Form 90 by Maureen Butler and Brian Butler. They published this in the Journal of Accountancy, December 2016. How to read the IRS Form 990 based on the 2010 IRS Form 990. And this is Peter Swords, Daniel Myers, Victoria Bjorlin, Jonathan Small, and they're with at least at the time, they were with the Nonprofit Coordinating Committee of New York. Information also comes directly from the IRS as of this morning, and also from my own experience. So I can be reasonably assured that the information I'm sharing with you is not only relevant, but it is accurate. And as I indicated before, Form 990 is not a tax return, even though it looks dangerously close to one. It's not so you file taxes, but it's a disclosure form. It is basically disclosing financial activity, your governance activity. And when I say governance, I'm talking about, what happens with the board and how you shepherd gifts. It is also a form that you can disclose your management activity. So it's chock full of really really good information, and I really think that we as professionals, as a group, don't really take stock in the Form 990 like we should. Typically, the people who are most concerned about the Form 990 are the accountants, the CPAs, but we all should be very very keenly interested and aware of what's in Form 990, why it's used, what the consequences of not filing are. All right, so Form 990 is due 5.5 months after your fiscal year. So whenever your fiscal year ends, be it June 30th, August 30th, September 30th, October 31st, whatever, you count 5.5 months into the future, and that's when your Form 990 is due. And every organization has to file Form 990, whether you make one dime or not. The type of form you fill is pretty much dependent on how much money you're making, and there are people who file the 990 in postcard, who have, I believe, under $25,000. I would recommend that you not file the postcard, but just do a 990 easy, which is the short form, or even a Form 990. That puts you in a position where you are disclosing information that could help you to market the organization. The Form 990 really has almost no information other than your name, rank, and serial number. And as a result, people are not really tracking that and they don't have any idea how you're running your organization. All right, so who reads Form 990 and why? There are people other than Valerie Leonard who are interested in Form 990. Obviously, the IRS, that's their form. They're using that form to glean information that will help them to understand one, how the organization is being managed, how it's being governed by the board. And it also helps them to help us put practices in place that will help us to be better stewards of our organizations. So, believe it or not, the IRS is interested in more than just being an enforcement agency. Obviously, people who give money to us, they're interested in understanding our financial performance, but they also want to get a sense for, what our policies are, how we govern and steward gifts, right? They also want to understand too whether or not our mission, our stated mission, is supported by our activities. People, as I indicated before, who are looking to work for your organization, people who are looking to volunteer, people who are looking to be board members, people who are looking to partner. So relevant stakeholders, they want to be sure that your mission and accomplishments, are in a line. So your mission, accomplishments, and activities, and they also want to make sure that the organization they're joining is on the up and up. They don't want to join and then within 24 hours find themselves on the 6 o'clock news because something went awry. So they're going to be interested in evaluating what's in the Form 990. If you are interested in getting a loan, so federal lending agencies as well as banks and other creditors, they want to understand, not only the financial performance, but they want to understand how the organization is managed and governed. People who are interested in working for you as a consultant, they'll use the information in the Form 991 to determine your credit worthiness. Is it worth their while to do business with you? But they also want to understand, what your value systems are, and then other external evaluators. So they will use the information from the Form 990 as well as other information that is at their fingertips to determine, how sound of an investment this organization might be, how well you adhere to generally accepted accounting principles, how well you adhere to best practices, your structure, your policies, compliance structure, and all of that good stuff. So, all of that is a review from the past few weeks. And so is this slide. I just wanted to share with you, the top portion of a Form 990. As you can see, just basic information, just like, it's very similar to what you will find on your Form 1040. So basic information. And today we're just going to focus on those areas that will help you to drill down and see, how ethical the organization you're looking to join or invest in is. And it's also a way for you to position yourself, in your responses so that you can portray your organization in the best light. And for our purposes today, the most ethical light. Obviously, the financial and governance sections are important, but we want to show you how people can read between the lines and get a sense for how well you steward gifts and what your ethics are. And when we speak of ethics, we're talking about a sense of morals and accountability, a sense for right and wrong. And even though your Form 990 does not explicitly give you that. You, like I said, you would read between the lines. So the first section you would be focused on is part 5, and that helps you to understand how the IRS would cross reference information that you disclose on Form 990 with information you give in other places. Now, you may or may not be able to directly get this information. You can get it for yourself, right? But if you're looking at other organizations, you might have to do some FOIA requests in order to get the information. But I can tell you, it's really important to be consistent with the information that you give to the IRS for payroll versus the information you give IRS for this Form 990 and information you give other states and other government entities. Because at some point, especially in the age of artificial intelligence, when it's so much quicker, at some point there's going to be someone who is looking at all of that stuff across the board, and they'll be looking for discrepancies. And if there are discrepancies in the information that you give one entity versus another, you can expect to get a call, all right, or a letter, to explain some of those differences. And it's good for you as you're preparing this, and working with your auditor, if indeed you have your auditor working on it. It helps you to understand whether or not the information that you're giving to various agencies are consistent. The degree to which you're telling the same story and is consistent across the board, that tells the IRS and other people who have access to all of these different databases, that lets them know that that you are a wise steward, a good steward over the resources that you're giving. You're consistent. You probably have strong management systems in place, and that, if you read between the lines, that gives them a comfort that you are an ethical organization. To the extent that you are the one who's collecting all this information, you have access to information from various sources, and you see discrepancies. Those are things that make you question. It doesn't necessarily say this is a bad organization, but it does make you question, what's going on. It could also help you to assign a level of risk, like the state of Illinois. They collect information on various organizations and the practices, and they take that information to determine whether or not you're high risk, mid level risk, or no risk, or relatively no risk. All right. And you can do the same too if that is your role, trying to determine whether or not you should invest in this organization. All right. So part six gives you a sense for governance practices. And when I speak of governance, I'm speaking of the board, I'm thinking of rules and contracts and that kind of stuff. Management, how does the organization operate itself on a day-to-day basis? Disclosure, how much of that information have you disclosed on the Form 990. All right. So all of that, it doesn't, on the face of it, it doesn't really tell you about the ethics, but it does give you a sense for what some of the values are. All right. So part 6 gives you insights into way the organization is governed and how it's managed, right? And there are certain questions. So, for example, they want to know the number of voting members. They want to know if you delegated control over management duties to somebody other than people who are directly supervised by the board. They want to know if you made any significant changes in your governing documents, your bylaws. That might seem like a minor question, but it could be very major because sometimes people make changes to bylaws that are not consistent with what the IRS is looking for, and they could also use that as an opportunity to control the organization. They can structure the bylaws and amend the articles in such a way that they give undue power to a select person or select group of people versus the entire board. So if that happens, you can best believe the IRS wants to know about it. And if for any reason you made any changes to your governance structure um, or your name, you need to disclose that in Schedule O. They want to know, did you take minutes? And minutes contemporaneously. That means, are you taking minutes of what happened as it happens? So they're going to ask you questions about that, and that's really important because your minutes are legal documents, and sometimes, depending on the level of investment, your lenders may want to see minutes. All right. Is there a committee that has the authority to actually act on behalf of the board without, the full board signing off? So those are really good questions. And some of those questions came about as a result of some organizations mismanaging their um, their organizations. So, what can we learn from Part 6, Section A? You can get a sense for the level of independence among the board members. So, when we talk about independence, are these people representing the interests of the organization at hand, meaning the organization for whom this Form 990 is prepared, or are they there as representatives of some other organization, right, that might have a conflicting interest? And, there are ways to determine conflicts of interest in other parts of the form. Those questions also ask about family relationships, right? So, how many family members are on the board or have influential positions as officers? Are there outside parties that might have influence on the board decisions, right? And if so, who are they? And you can disclose that, in Schedule O, and there's another section where you can disclose it as well. You can learn whether or not the board changed its bylaws, so that will pique your curiosity, I'm sure, and whether or not they kept minutes. Remember, minutes are legal documents. Minutes can also be, they are subject to public inspection. All right, Section 6, Part B, all right, Section B, Part 6, Section B. I'm sorry, I had that totally backwards. And this is a section that helps you to disclose your policies, right? Um, so there are going to be questions about certain policies, such as whistleblower policies, document retention. And when we talk about document retention policies, that's basically a policy for, how long you're going to keep records. Do you keep certain records for 1 year, certain records for 5 years, certain records 10 years, and other records you just never get rid of? So they want to know whether or not you have that. They don't want to have a situation where they're asking you questions and you're shredding everything. Do you have uh, a whistleblower policy, conflict of interest policy? And what you learn from that section, you can learn whether or not they actually have policies in place that regulate how they're going to deal with conflicts of interest. You can also determine whether or not all members of the board have a chance to review the Form 990. And it's a good practice for everybody on the board to review Form 990, whether or not they're serving in some financial role, right? The reason why it's a good practice is because whether or not you, as a board member, have engaged in some questionable activity, whether or not you know about it, you're going to be held responsible. So it is in your best interest, it's in the organization's best interest to have every board member review Form 990. You can also learn whether or not there is a whistleblower policy and whether or not there are procedures in place for determining how much the CEO gets paid. And then you might wonder, well, why is CEO compensation? Why is that a big deal? How, how does that speak to ethics? Well, if excuse me, if you are paying your CEO much more than market value, or market rate, so to speak, that is going to raise a red flag. And it could be cause for more questions, not only from the IRS, but other stakeholders. All right, so section C of part 6, this is the disclosure section, and you indicate here how you're disclosing information. So, how are you sharing the Form 990? Is it on your website? Is it also available on others' websites? Are you making it available upon request? Are there other ways that you are sharing the information on Form 990? So, if so, you go into detail on Schedule O. All right, and Schedule O, that's kind of a catch all to explain things that are not readily apparent. So you can use your opportunity on Schedule O to describe, your various policies and why it's important and how it's been helpful to the organization, right? So you can go over and beyond the call of duty of just checking boxes, that indicate yes or no. You can also kind of tell a story about how this disclosure and how these policies help the organization run more effectively, how it also impacts your capacity. All right, so when we look at section C, what can we learn? We can get a sense for whether or not you have policies and practices in place to disclose critical documents, again, such as your conflicts of interest policies and your Form 1023. And Form 1023 is the application for tax exempt status. All right, so part 7, that's another area of interest, right? And then you'll see too that there are ways where you can cross reference information that are given in one section with the information that's given in another section. And together, these sections begin to tell stories and give a pattern. So when we look at the compensation, you're going to get, or this is your opportunity to list, who are the board members and other key members, how much time they spend, how much uh, money they're actually paid. And, that becomes critical because at that point you can begin to identify, you know, there's board members or key leaders who are getting significant money, especially if they make over $100,000 from the organization. So you only have to disclose this if they're making over $100,000. All right. And this applies not only to people who were currently employed with you, but people who were formerly employed with you. and people who are currently on the board and former board members. So they want to get a sense. Remember, when you started your nonprofit organization, you learn that you can't have any profits coming back to the people who are on the board or um, people who are key employees. So this is a way of making sure that nobody who is a key stakeholder is being enriched from the organization. All right, so the same types of questions in Part 7, Section B, but these questions are focused on independent contractors. So they want to get a sense for what independent contractors are, are working for you, and they're making over $100,000 a year. So you give their name and address, you give the type of services, and then you speak to how much they were paid. Again, as you start to complete these different sections, I've seen organizations that have people listed in several sections, and those are things that made me wonder, there's some serious conflicts of interest and potential self dealing whereby people from the board and staff are being enriched from the organization as opposed to, making sure that the charitable purpose is being fulfilled. All right, so you can learn again from Part 7, Section B, what contractors were paid over $100,000. You can compare the names on that list to the list of people who are members of the board to see, in some cases, those names that are on the board may appear with the contractors. And at that point, you want to look a little bit more closely. All right. Um, Another area that you might find of interest would be Part 9, the Statement of Functional Expenses. So, generally, what this is looking at is how the organization spends their money, right? And they're dividing their expenditures into three different categories. One category being the programs and services. The second one, and that's column B, the second category being, any management and general administrative expenses, and then column D being fundraising expenses. So you add all those together and get a sense for your total. So this will help you to disclose, how much money is going into those different categories, but is helping other stakeholders understand. So what percentage of your money is actually being spent on program? What percentage is actually going to admin, and what percentage is going to fundraising? And as a rule of thumb, and each organization is different based on the activities, based on the sector, based on how old the organization is. As a rule of thumb, you typically want to make sure you're spending no less than 70% of your funding in program. Um, Anywhere from 10 to 15% can be used for fundraising, anywhere from 10 to 15% can go into admin. And it's also important to know, too, that these are what they call allocations, and they may not necessarily line up line for line with functions of the people. So, for example, typically speaking, your personnel costs can be anywhere from 70 to 80% of the organization's costs, right? If you were to put all those expenses into admin, I think the IRS and everybody else will be looking at you sideways, right? Because we tend to think of personnel as an administrative cost, but it takes people, it takes personnel to actually run those programs. It takes personnel to actually fundraise. So at that point, you need to determine What percentage of their time is spent on program XYZ, how much of their time is spent on fundraising, and how much time is spent on fundraising. All right, so that's another class for another day. I'm sorry I spent so much time on it. All right, so what can we learn? We can learn how healthy the organization, and this is part nine, the statement of functional revenue. We can learn whether or not the mix of program, administrative, and fundraising expenses is appropriate. Now, like I said, appropriate is going to vary from organization to organization, from sector to sector. If you're someone whose job it is to determine whether or not you're going to make an investment in those organizations, it may be helpful for you to look at those costs, not only for the organization you're thinking about investing in, but look at similar organizations that are in similar locations that do similar work, and see what their mix is. And if you see that the organization that you're about to invest in has a mix that's significantly different, you know, meaning that, things like, not enough money is going into the program, that may not cause you to not invest, but if you're going to have a conversation, it will be one of the things that you would ask a question about. And if the question is satisfactory to you, you can go ahead and invest. All right. Part 12, financial statements and reporting. All right, so this lets the reader know the accounting method that's used for Form 990. Is it cash? Is it accrual? Is it some other method? And I can tell you, if you want to present your organization in the best light, um, meaning that you are an organization that manages your finances using generally acceptable or accepted accounting principles, accrual might be the best way to go, right? There are organizations that do just as well. They're more conservative using the cash basis, but the accrual accounting method is considered generally acceptable. All right, so you can also learn who prepared the statements and whether or not the statements are audited, whether they were compiled by someone outside the organization, whether they were compiled by someone in the organization. So, what can we learn from part 12, accounting method used? We can learn whether or not the people who prepared the statement are independent, or if they are people who are subject to, the rules of, the authority of the organization. So independent would be people who don't work directly in the environment. It could be your bookkeeper that you have contracted out. It could be a CPA, right? So the further away you are from the organization in terms of reporting structure, the more independence. And we're probably more likely to give more credence to organizations that have these forms prepared by an outside source. That does not mean that just because you prepared it internally that we should not trust them. That's not what it means. It just means that, if it just gives you greater confidence when there's somebody who doesn't have a horse in the race is also the one who is preparing the document. It's this extra set of financial control. All right, and then we can also learn whether or not the method conforms to GAAP, generally accepted accounting principles. So I want to go over a few terms before going on to other sections, because they use terminology that I certainly don't use in my everyday life, and I can imagine most of you don't use it, right? So, the first definition I'm going to share with you is excess benefits. So, excess benefits, in a nutshell, they're transactions where the organization is paying over market value, right? And then there are certain organizations that it applies to, and certain organizations it doesn't apply to. So when you see this um, highlighted area, that's a link to a list of types of organizations. So organizations including government entities, including um, private foundations, they are more subject to the excess benefits. However, if you are not one of those organizations and you're still paying more than market value to, you know, people on your board or people that your board members have relationships with, that becomes questionable as well. So, who are disqualified people? Disqualified people are people, again, I'm going to share a list with you. So those are people who should not be engaging in financial transactions with the organization. And there are certain exceptions, but generally speaking, they should not be engaging in financial transactions, within certain boundaries, because if that continues to be a pattern, it looks more or less like the foundation is created not for a public good or a charitable purpose, but really to enrich board members and people who work for the foundation. And we really don't want that to happen. So it's really, really important. I know that most of us are not even close to doing this type of work, but it's important that we understand the terminology that is being used in forms that we sign off on, right? And understand, some of the consequences for making mistakes. All right, so here is a list. I Here is a list of disqualified people, and this is for public foundations. So people who give significant contributions, $5,000 or less, oh, I'm sorry, $5,000 or more, um, could be considered disqualified. People who manage the foundation, people who have more than 20% interest of organizations that give more than $5,000, they're substantial contributors. Family members of any of those people, contributors, foundation managers, or owners of organizations that have more than 20% interest that are giving to the foundation. Corporations in which persons described in 1 to 4 above hold more than 35% voting power. So basically, people who have significant influence are disqualified people. Partnerships, this goes for partnership organizations, and that could be LLCs or LLPs. Um, Trusts or estates in which persons described above have more than 35% of the beneficial interests. Certain private foundations which are effectively controlled by the person or persons in control of the public foundation, and government officials. So the IRS is pretty specific about who disqualified people are. And they even provide audit tips, right? They are advising the auditor. So you should have these discussions with your auditors if you think, there could be a triggering, circumstance, right? So you want to determine the relationships between the private foundation before you actually, go through a whole Chapter 42 analysis. So Chapter 42, that's a section of the tax code, right? to determine, who is disqualified and who's not. So they want to make sure that, before you even go there, right, that you pretty much know for sure that these people are disqualified persons by definition, right? And then, two, they're advising auditors to look closely at transactions between the organization and private individuals, corporations, partnerships, and other potential disqualified people. These transactions could be the sale or exchange or leasing of property, the lending of money or other extension of credit, furnishing of goods, services, or facilities, payment of compensation, transfer to or by use for the benefit of the income or assets of an organization. All right. So if you're transferring income from one organization to another, we need to look at who stands to benefit. If they stand to benefit and they are part of your board, or if they're an officer or a key employee, that needs to be disclosed. And again, this is not work that most of us do, but if we're running organizations, if we're members of the board of organizations, we really, really need to be aware of, you know, of this policy, so to speak, because one, we're going to be judged by it. Two, we could be engaging in activity that's going to cause people to, you know, take a second look at us and look not so great, right? So, for example, I can remember running an organization that made grants in the community. And prior to us becoming a 501c3, we were acting in an advisory capacity, the steering committee and I as the person who was managing the project. So as long as we were in an advisory capacity, it didn't matter that some of us receive grants as long as we were adhering to a, a policy, a conflict of interest policy where we disclosed the conflict. We didn't um, vote on our own gifts and, make it clear I didn't receive a gift, but there were people on the steering committee who did get grants. So that had to be disclosed. Once we became a separate entity, the people who were on the steering committee, they no longer were steering committee. They were no longer in advisory roles. They were board members. So at that point, it was more critical that we had conflict of interest policies in place. And in fact, we in our bylaws indicated that they could not even get a gift, right? It was very important. We didn't even want to raise, um, we didn't even want to be viewed, right? We didn't even want to give the appearance of a conflict of interest. So our conflict of interest policy stated that board members could not get grants. All right. So enough of that. And for those accountants and financial people in the room, there are situations in which transactions with disqualified people can be allowed, and you would have to go and review Section 42 of the IRS code. Uh, that's another lesson for other people. That's above my pay grade, but just so you know, with everything, there are exceptions. All right, so having given those definitions, I want to show you where you can find where these are applied, right? So Schedule L, Part 1, excess benefit transactions. So if any of the people who are disqualified people are getting any financial benefit, a contract, it could be you not they could be charging you rent, you could be paying somebody on your board. If they are getting money that's above market rate, then that's a cause for concern. And that gives an indicator of the ethics of your organization. I can also remember seeing the Form 990 of an organization where, they disclose the benefit, the excess benefit transaction, right? They indicated the board member who got it, and the board member, so the board member also was getting a salary. So that looked very suspect. And just so you know, if you start establishing patterns where it looks like board members are benefiting from the organization financially or politically more so than the general public is, if they look more like they're enriching themselves than helping the community, they can be they can lose their tax exempt status and then have to pay taxes. Alrighty, so here, Schedule L Part 2, again, they're looking for loans to and from interested persons. So not only does this apply to foundations, but it also applies to all organizations. So they want to get a sense for whether or not people on your board, people who are employees, people who are volunteers, people who are partners, people who are business partners, anybody who has some sort of financial interest in your organization, or even if it's an elected official, right? Um, if they're getting loans, you need to disclose who that person is, their relationship to the organization, why the loan was given. Um, was it to the organization or was it from the organization? They want to know how much the original loan was and how much of the balance is still outstanding, whether or not the loan was in default. Was it approved by the board or a committee of the board? And is there a written agreement? So this gives you a really good indicator of, one, how an organization is governed, two, whether or not there are opportunities for fraud and mismanagement. Because if you don't answer these questions correctly, and I'm not saying that you should give false information. And when I say correctly, if you're not given a satisfactory answer, if your answers suggest that people from your board or people who work for you are getting enriched at the expense of the community, that's a red flag, right? I know of an organization who had a board chair. He got a loan. They were in the business of helping small businesses. They didn't give loans to small businesses, they just gave technical assistance, yet they were willing to give a loan to their board chair. And rumor has it, and I don't know that this is true or not, but rumor has it that he took that money that he borrowed from the organization to buy a building for his business office. Now that that is questionable. And if you follow money trails like that, and you can begin to establish those trails just by looking at different parts of a single Form 990 or Form 990s over time, when you start seeing patterns of different people's names appearing in different sections, that's a clue that something might not be kosher, right? And it could be a conflict of interest. And then, if it is a conflict of interest, you want to look at Schedule O to see if they give further information as to why those things that look like self dealing are occurring. Are there extenuating circumstances? And whatever the circumstances are, if they don't seem normal, right, then that's a red flag for you as to whether or not you want to join or invest in such an organization. All right. So again, Schedule L, grants or assistance benefiting interested persons. If you are giving grants to interested people, and when we talk about interested people, we're talking about board members, we're talking about employees, we're talking about partners of the organization, and we're looking at others who may have some sort of relationship. So you're going to indicate the name of the interested person or organization, the relationship between that person and your organization, the amount of the grant, the type of assistance it was. Was it a personal grant, a grant for personal purposes or for some business purpose, right? So the type of assistance. So was it a grant or some other gift? Was it a scholarship, right? So what can we learn from Schedule L? Again, the potential for conflicts of interest, um, the extent of self dealing amongst members of the organization, and the potential for board members to gain at the expense of the organization. And again, if the IRS noticed too many of these patterns, conflicts of interest, family members benefiting, family members of people who have an interest, all of these little close knit relationships, when those become exposed and it looks more like a group of people are getting more money and gaining at the expense of the organization, that organization can literally lose their tax exempt status because they've shown that they're not really in it for the community. So if they're not really in it for the community, why should they get the benefit of a tax shelter, right? All right, so if you have any questions, feel free to post in the comment section. All right, and I will respond. Okay, there doesn't look like there are any comments. So if you have any questions or comments later on, feel free to post and I will get back to you. All right. Thank you so much. And be sure to tune in next week when we're going to talk about how Form 990 can be used for performance management purposes. All right. You take care. Bye bye.